All right, welcome everybody. I appreciate that you are here. This is our 2024 end of year holiday tax masterclass. If you're a transformational leader, a coach, a healer, speaker, author, anything similar, if your mission is to make a difference in your clients' lives, then you're in the right place. We're going to talk about the biggest year-end tax blunders that are wasting hundreds or thousands of dollars, or for some of you, tens of thousands of dollars every year. So thank you. I'm glad you guys are all here. So first, of course, we always start off with the anxiety and our feelings, right? Because if we don't heal it, we can't feel it. You guys know this, right? We don't feel it, we can't heal it. We got to do it. So when you think about taxes and dealing with your taxes and your business taxes, how does it make you feel? Drop it in the chat. You got to feel it to heal it. You got to feel it to heal it. When you think about taxes, drop it in the chat. How do you feel about this stuff? What do you, drag, dread? Janelle, I love that. I hear dread all the time. It's one of the most commons. Yeah. Ick, time consuming. Ugh. Yeah. Even if you just have to type in, right? Whatever you feel, it's all good. Are you doing it right? I get it. It's normal. That's okay. This is good stuff. Overwhelmed, anxious, concerned, denial, curious, eager, frustrated, interested, even for some of you, emboldened. It's okay. It's totally okay. A lot of us do coaching and healing, so you know that you have to feel it and that your feelings are valid. And that once you feel it, you can start to get through it, right? You can take that deep breath, use the tools at your disposal, tapping, muscle testing, pendulums, praying, higher source, whatever it is. I don't care what your tools are. I have mine, you have yours. It's all good. It's all valid, right? So we're okay. Here's the other thing. All of us here today, I'm going to guess, I don't want to assume, but I think it's a reasonable assumption. All of us here today, do we have food in our bellies and a roof over our head? Everyone here, we have food in our bellies and a roof over our head. There are a billion people in the world today who don't have that, right? So we're fine and we're okay. Now, spotting our opportunities for tax savings and compliance, it's just common sense, being open-minded, looking at details and a can-do attitude. You guys already have these qualities. You're running businesses. You're good. You can do this. The skill set is the same, just applied to a different subject matter. Most of you know me. For those who are new, I'm Ian Foster. I got my JD from UC Davis. I am still a licensed attorney, a practicing attorney in the state of California. I educate and empower heart-centered business owners on a full-time basis. That's my specialty. I spent 18 years in government, and when I was in government, my job was to create training programs for the other auditors and attorneys, and I traveled the country teaching them. So now I'm giving back with that inside knowledge. So what are we talking about today? Why now? The clock is ticking on 2024, but it's not too late to make sure your 2024 tax liability is low as possible. Believe it or not, right? Your 2024 liability will be basically set in stone on midnight, December 31st. Are we there yet? We're not there yet, which means you still have a chance to do something to optimize it. And if you wait until you're hit with that auditor tax bill, it's going to cost you a lot. So let's do something proactive. So we're going to talk about some very basic things today. Some of these are going to seem a little common sense, which is great because they are common sense, but they are good reminders. And a lot of us need these reminders of what you can do in the last couple weeks of the year to make sure that you are saving money for 2024 on your taxes. Having too much income can be a problem. And I'm going to explain what I mean by that. I don't mean turn down money. Certainly not what I mean. Not spending enough and forgetting our P&L statements. And then we'll have an offer for those who stay so we can get together in a community just like this of an amazing people and set our 2025 legal and tax priorities together. So the first tax blunder, too much income means paying too much tax. Now, can you have too much money? The answer is no. I'm not saying you can have too much money. I'm not saying you can make too much money or have too much money or have too much income, right? Don't be afraid to make money. In fact, one of the biggest mistakes I see is people who are afraid to make a lot of money, and so they turn down income. I once had a client a couple years ago who turned down a $500,000 contract in California because they didn't want to pay 8% of it to the state of California. Does that seem like a rational money-making decision? Would you turn down 500,000 just to avoid paying 8% of it to California? No. Was that a rational decision or was that a fear-based decision on their part? What do you guys think? Type rational or fear in the chat. Yeah, you guys see it. Fear-based decision for sure. Right? Because it's emotional. Right? It's got nothing to do with the math. You would all gladly take 500,000 even if it meant you had to pay 8% to the state of California, right? I would. I do all the time. I'm in California. Right? So I'm not saying turn down money. What I'm talking about is income for tax purposes, your net taxable income at the end of the year. That's what we're talking about. So, what you want to consider is your profit and loss situation. From your business, are you expecting to report a profit or a loss? If it's a profit, how much? Do you have other sources of income, like a job, another business, a rental property? This is all very fact specific based on each of us. Right? So you have to think your entire situation yourself. Now, you might want to delay some of that income, especially if you have a lot of income from other sources like W-2 wages or rental property, or if your business looks like it's going to report a significant net profit already. Have you ever thought about delaying income till after the 31st? Maybe if you're going to be selling some sort of asset at a gain, wait until January to close the sale. Or if you don't need the income to pay bills, wait a couple more weeks to bill some clients. Now, if you need the money to pay bills, then collect the income and pay your bills. I'm not saying default on your bills. That will be more costly than any tax savings. But if you can get away with delaying some of that income until the first or later, then maybe just wait a little bit longer to bill and collect for it. Sometimes I do that. Sometimes I'll wait until the first to bill. If I don't need the money right now, I'll hold off because then I'm not recognizing it this year for tax purposes. So it's less income this year, less taxes. Tina's got a puppy. Lucky Tina. Now, this is the question I always get. So, doesn't this just increase my taxes next year? All right, so I delay $2,000 this year, but then I have to recognize it next year. So isn't that a wash? What do you guys think? Is it a wash? Does it make no difference? What do you guys think? If you delay 2,000 this year, you recognize it next year, is it just a wash that makes no difference? Yeah, Rita, it depends. Mm-hmm. Depends. It always depends. Yeah, you guys are right, right? Now, if you expect to make a lot more money next year, then maybe don't delay. But if your income is going to be roughly comparable, then I would delay. And here's the thing, even if it's a wash, is it really a wash? Let's say it is a direct wash. Let's say I reduce my taxable income this year by 2,000 and increase next year by 2,000. Is that truly a wash for me? Let's say it's even 1-to-1. Think about the time value of money. Inflation is a thing. It's always a thing. The only question is, what is the percent? Which means if I save money this year and I pay it next year, I've made money because of the time value of money. And the other thing that we always talked about in tax law is every year stands on its own. Do the best you can for this year. Most of the time, there are exceptions. Do the best you can this year and then worry about next year. Next year, you will have more opportunities. So save the money now, do the best you can now, and then we will let next year take care of itself. And then the other side of this coin, spending too little, right? So instead of delaying income, sometimes you want to accelerate your deductions or your expenses. So maybe you're going to spend more money on deductible items to reduce your tax liability this year. A lot of folks are doing this right now. Thankfully, I'm seeing this be a bigger deal. A lot of people looking for opportunities. Again, you have to consider your own profit and loss situation. Are you expecting to report a profit or a loss, or how much? What are your other income sources? If you're expecting to report a large profit or have significant other income this year, and if you can afford it from a cash flow perspective, and if it's not disruptive, then you might want to spend more money this year. Now, again, don't do this if you can't afford it. Don't do this if it will be disruptive, but it's something to think about. Delaying income and accelerating expenses. How do you spend more money now? Purchase supplies you need anyway. Maybe you were thinking about getting a new laptop or a new printer. Get it now. Maybe it's on sale for the holidays. Maybe you're looking at year-long subscriptions for coaching or products or services next year. Pay for it now. Make that payment before the end of the year. Maybe there are masterminds you want to join. Stage opportunities. In fact, do you guys know Alex Moscow at all? Anybody know Alex Moscow? He's in the transformational industry, big name. He has been all over Facebook saying, I am happy to pay for your stage for next year now. Why is he doing that? If you have a stage for Alex next November, he wants to pay for it now. Do you guys know why he wants to do that? I happen to know exactly why he wants to do that. It's what we're talking about. Right? He wants the tax deduction now. Right? So a lot of people do that. Yeah, Corey deducted this year. So there are people actively taking advantage of this. And again, even if it's a wash, maybe it's a wash, maybe it's not, but even if it is, you're going to worry about next year. In the tax law, it is an axiom that every year stands on its own. And you would almost always rather have the deduction now. Again, unless you know your specific situation, you can create an exception. But the general rule of thumb is to accelerate those deductions and take them now. Get the benefit now. You don't know what's going to happen next year, right? You could die next year. You could get sick. Who knows? But at least you know right now you can get the benefit of that deduction. So if there are ways to accelerate it, then do that. And then the third blunder, it sort of blunders right into this, falling too far behind on your profit and loss statements because you can't analyze your situation. So think about what we've been talking about the last few minutes. Analyzing whether our net income is too high so we can delay if it's practical. Analyzing whether our expenses are too low so we can accelerate them as if they're practical. Now, how do we do that? What information do you need to do that? You have to know what your year-to-date net income is right now. Can you make these decisions if you don't know what your year-to-date net income is right now? It's very hard, right? And we only know that if we've done our P&L statements to see where we stand. If you don't know where you stand today, then you don't know how to take advantage of opportunities over the next 2 weeks. You have to know where you are now, right? So if you are behind on your P&L statements, and I'm not admonishing anyone or judging personally, I'm right now still a couple months behind on my own P&L statements, so I need to get caught up in the next few days so I can make these own decisions for myself. If you don't know what your net income is right now, year to date, you cannot make an informed choice. So get caught up on that. Any questions on what we talked about so far? Questions, comments, anything? Does it make sense? I will say, as a quick little bonus year-end tax blunder thing, watch out for scams. This is the time of year when people who are running tax scams are targeting small business owners, right? So watch out for that. I'm just giving you a handful of tips that you can use on your own, totally legitimately, but watch out for people throwing magic beans at you. This is the time of year, the next couple of weeks, people are going to be throwing you magic beans. If you eat my magic bean, if you plant my magic bean, all of a sudden, all your tax dreams come true. Right? So watch out for too good to be true promises over the next couple of weeks, because this is when they're passing those around. Make sense? No questions on any of that so far? We're good. We're making good time today.
This makes great sense.
Oh, thanks, Pat.
I
Appreciate
mean,
it.
everything I've heard so far.
Well, I'm trying to keep it very practical and basic, right? These are things
Yeah.
that once you hear it, it's obvious,
Mhm.
right? But it's easy to forget. Oh yeah, I can delay my invoicing by a week, or I can make that office purchase a week sooner, right? I find for my wife and I, a lot of our best tax savings come in December when I start to look at where are we and can I afford to put off some of the income for a few weeks and can I accelerate the deductions by a few weeks? Right? And that can save you thousands and thousands of dollars, especially if you're paying self-employment tax. Remember, self-employment tax on your business is 15.3% of the net right off the top, right? So if you can reduce your self-employment income by $1,000 over the next 2 weeks, you've saved $153 at very little trouble to yourself. And multiply that by 10 and think of what you saved. So for me, the last month of the year, December, is when I do a lot of my tax planning for the year. I think about it all year, but in December is when I make those little adjustments that save us a lot of money. All right. All right. So again, just a summary when it comes to income, delay some income a few weeks to save money. Again, if it's practical, right? If you need the income now, go ahead and collect it now. If you need it to pay your bills, I'm not saying default on your bills. Go ahead and collect it. But if you're able to delay some, then delay it. When it comes to spending, if there's stuff you need anyway, buy it now. If it's practical, get the deduction now. And your profit and loss, you have to know where you stand in order to plan. If you don't know what your net income is today, it's very hard to figure out what to do over the next 2 weeks. So maybe spend a little time over the next week getting caught up. or at least getting yourself a decent estimate, right? Watch out for those scams. Sugar, it's okay. Well, it's ski season. It's cross country ski season. So he sees all the cross country skis. Come here. Hey, come here. Up. All right. Calm down. So now what? So much of this is about just making this a priority. It's something you do on a daily basis, right? Especially keeping up with your P&L statements. So that's why we have our legal priorities workshop coming up. This is something we do the first week of January every year. Now, for those of you who are members of the second Saturday plan, this is already bonused in for you. You already have it. So you don't have to buy into this separately. For those of you who are not part of the second Saturday plan, this might be a great opportunity to get together and meet the community and see how we're doing and walk through our 2025 priorities. We're going to talk about forming and using your business entity properly. These are things we talk about all year, but on January 4th, I know it's the first Saturday in January because it's a bonus. We're talking about how to prioritize some of these tasks, tracking your income and expenses, tax and financial planning, asset protection tasks that you can take care of, and government compliance issues and other things. And so this is going to include on January 4th, first Saturday in January, 3 hours of live training, workshopping, and Q&A beginning 9 a.m. Pacific, 12 p.m. Eastern. You're going to get the printable slides and worksheet, recordings in case you can't make it, because not everyone can make it live or the whole thing. We're going to have a special guest appearance every first Saturday in January. We always have a special guest to give you some additional teaching. I do know who it is, but I'm keeping it a secret for now. It's somebody amazing. You're going to love her. It is time effective and cost effective. We do this in half a day. You get your printable slides and worksheets. You're going to get work recordings in case you can't make it. And all this for 49 bucks. Our legal priorities workshop where we go through the worksheets together. Let me pull up. I lost my Clippy thing right here. Let me grab the link. Where did it go? My other window closed down. There we go. All right, so I drop it in the chat. If you want to join us on January 4th for 49 bucks to go through all of this stuff together. Again, if you're already in the second Saturday series with an active membership, this is bonused in for you. But for the rest, you can join for 49 bucks. It's a great way to see if you like the community and get your priorities set for the year and do this all together. Awesome. Katie, did you have a question?
Yes, hi. Sorry, I'm on my phone, so hard to figure this all out. But question about the like you're saying about delay income. If
Mhm.
you can you deposit checks in January and say you earn the money in Jan like let's say you get an affiliate income from somebody and you get the check in December. If you deposit it in January, can you say you made it in January or no? Is it when they cut the check?
So when you say a check, you mean those old-fashioned little rectangular pieces of paper?
Yeah, I mean my understanding is yeah, they're literally going to send me a check. So, yep.
Yeah, so if it's a physical check, I would hold off and deposit it in January.
Okay, so that would work then. Then I could say I earned it in January.
Yeah, because I'm going to assume you're a cash basis taxpayer. Um, if you don't know, then
I'm
the
a sole proprietor. Yeah.
yeah, so if you haven't made any elections on your accounting, then you're cash basis, and I would hold off until January to deposit it, and you can make a pretty good argument that it's next year's income.
Okay.
Yeah.
Yeah.
Again, unless you need the money, if you need the money in your account now, then that's fine. Deposit it now. But if you
Well,
can't,
no, actually, I mean, my situation is complicated because it's my last year filing jointly with my husband.
mm,
But I actually did for the first time make a little bit more than my expenses this time. So I actually, and then I wow, 15%. I didn't know about the 15% self-employment, but I guess I'm paying that. So so I just was thinking about what you were talking about and like, oh, I should probably not put in, I don't want to make any more money this year because
Yeah.
next year I'm going to be on my own and I'm going to be making nothing. So I'm not worried about next year. Like, yeah, next year is going to be crazy. Well, unless I do really well next year, that we'll go there. I could make a ton of money next year, right?
Well, you could, and we'll go ahead and say you will.
Yeah.
We'll manifest that. But I would worry about next year.
Okay.
Because
Yeah.
there are a few guarantees. And then next year, this time of year, we'll be having the same discussion. So yeah, if the general rule of thumb is delay the income and accelerate the expenses. And then you worry about next year, because next year is not guaranteed. We could all die in a nuclear holocaust tomorrow and none of this will matter, right? All we have is right now.
Yeah, exactly. I just didn't know if I could, that's the way I do it. Like even when stuff hits my stripe, I
Mhm.
consider I make the money when it hits my stripe. Like even if they pay it ahead of the, like that's how I've been doing it. Like I make the money the day it hits my account.
Yeah,
I don't know. Yeah, I don't know
if
if that's
yeah.
the right way to do it, but
Well, I tend to count for something like a credit card processor, I tend to account it for it on the day it hits the processor, not the day it hits my account, because I have an absolute right to the money at that point.
mm, okay.
But a physical check is a little different. A physical check gives you a little bit more gray area, right? As opposed to something electronic. If they put it in Stripe on the 31st, it's probably this year's income.
Yeah, well, Stripe always takes a couple days. Like I don't get paid out immediately from my
Yeah.
Stripe.
No,
So
they usually take, 2, 3, 4 days, whatever, depending.
yeah, yeah. So
So
there is that
with
delay.
something like Stripe or PayPal, I tend to count it on the day it hits the Stripe or PayPal. But with a physical check, I will occasionally hold on to the check until the first and then do it, because a physical check just gives you a little bit more gray area that you don't necessarily have
Okay,
with the electronic stuff. Yeah.
gotcha. Okay, thanks.
So if to me personally, if I have a physical check and it makes no difference whether I deposit it on the 31st or the first, I'm going to do it on the first every time.
Okay, yeah. I mean, it's also such a little amount of money, but I was just thinking, well, like you said, like
Every
don't need
little
to
bit
pay more
counts,
than, yeah, right.
there's not just the income tax, there's the self-employment tax, which is 15.3% no matter what the amount. So,
Yeah, yeah. I
yeah.
hadn't been thinking about that. Yeah, thanks.
Hmm. And paying taxes is great. If you're paying a lot of tax, that means you made a lot of money. Paying a lot of tax is the problem we all want to have. I would love to have the problem where I have to pay a $10 million tax bill next year. If I'm paying $10 million in taxes next year, what does that mean for me personally? Right? It means good things, right? I'm not getting charged $10 million in taxes on no income. I'm getting charged that on a massive amount of income. So that's the problem I would love to have. Tina.
So just because my brain is now getting confused. So for me, I'm an LLC.
Mhm.
If I don't take the income as a distribution, even though there may be money sitting at my in account at the end of the year, I'm not getting charged the self-employment tax of 15. Is that not correct?
That's a separate question. Taking a distribution, you do not get charged self-employment tax on distributions. You get charged a self-employment tax on the net income of the LLC, whether you take it or not.
Oh, okay. Thank you. You just
Yeah. If
cleared that
I
dust up.
assume, are
Thank you.
you're the sole owner, right, Tina, of the LLC?
Yes.
Yeah.
Hmm.
So then, Tina, you're getting charged the self-employment tax on the net income of the LLC, whether or not you distribute it.
Okay.
You're also getting charged income tax on the LLC, whether or not you distribute it. So the distribution is a separate question from the recognition of income.
But does the distribution end up getting taxed because I took the distribution then on top of it?
Only if the distribution exceeds your investment in the LLC.
Okay.
This becomes a much more complicated question. We talk about this
Yeah.
in some of the other workshops, Tina. Yeah. So
Okay, got it.
yeah, we
All
talk
right.
about this a little bit in December. We're going to talk about it more in February, right? But your investment in the LLC includes all the money you've dropped into it, all the property you've dropped into it, and all the tax you paid on the income for it, right? So if you drop $1,000 in the LLC in cash, that's $1,000 in investment. If you drop $1,000 worth of property in the LLC, that's $1,000 in investment. And if you pay tax on $1,000 of LLC income, that's counted as an investment in it also. So that's 3 grand. That means you can pull 3 grand out without any additional tax consequences. Because the whole point is to make sure you're not being double taxed on everything. They're just trying to make sure you're getting taxed once on all of it. So, but the tax forms basically, if you're following the forms and the instructions, it all gets worked out in the math in the end.
Okay.
But that is also why you have to track the inflows and outflows of your LLC, not just income and expenses, but contributions and distributions as well. And that all gets worked out in the math. Yeah. Oh, thanks, Stacy. Oh, Stacy Paley. How about that? Our good friend Stacy Paley. Some of you know her. Yeah, thanks, Tina. So the taking a distribution to cover your personal expenses is, I wouldn't worry about that one way or another. We're talking about more like, is the LLC itself recognizing income or making expenses? Yeah. Mhm. Any other questions? Awesome. Oh, Pat, yeah, go ahead.
I don't know where to start it and whether my question goes in here. I have been pulling back the last couple of years from earning money because my husband has dementia. It's been 19 years so far. He's doing very well, and he now has gone into care because I've been able to keep him at home and, do a lot of very creative things. And it's a lot of my work that I'll be building starting in the fall. I'm not totally sure what my question is, but it's like, is there any way that I can draw on some of the losses from this year and last year? My income's been very low
Mhm.
because I've been caring for him. And I'm already getting calls about doing some really good work starting in January. So is there any way that I should shape taxes, or, I mean, I'm not gonna have any big income this year, not.
Well, I would claim if you have losses this year, I would claim them now. And then that will create what we call a net operating loss that you can then carry forward to when you do have income. But you have to claim them now.
Oh, okay, this year.
Yeah, if the losses happened this year, you have to claim them this year.
Okay,
Yeah, you cannot claim them in the future.
that makes sense.
And then if it creates an entire net loss on your whole return, it creates what we call a net operating loss. And then next year, if you have income, you can carry that forward and offset it.
I will probably be well under no income this year after I can still take out the expenses I have and say of
Mhm.
going to classes like this and
Yeah.
maintaining the work in the business. And
Yeah. So that's good. Claim a negative income. There's nothing wrong with that.
okay, that'll help next year.
Yeah.
Thank,
And then you can use it next year because if you incurred the expenses this year, they have to be claimed this year. They cannot be claimed next year.
yeah,
All right. So you have to claim them now and then document that net negative now so that you can use it later.
okay, thank you.
Yeah. Linda.
There we go.
Yeah.
I think Pat and I need to get together. My husband was just diagnosed for dementia.
Mm.
So I was just wondering how that's going to fit into, because I handled all the taxes anyway, but I'm just wondering how that is it how, in what way, shape, or form is that going to change? He's on a ton of meds and a lot of other things. He's had a lot of things going on for coming up on our 17-year anniversary of his first stroke. So, he just had another one last week. So, I'm just trying to figure out, I'm in Maryland. I understand that they have a little better, maybe more lenient kind of way of looking at the healthcare side of it in terms of the costs and expenses, rather than some of the other states. I don't know that in any detail. I just heard somebody mention it to me. So, so any thoughts you have, I would appreciate.
No, I have no idea what sort of personal expenses Maryland allows on that side.
Who is this that was just talking?
Linda.
Linda Kempen.
Mhm.
Oh, I couldn't see you moving. Can we connect?
Sure, of
I am
course.
loaded with resources.
Okay. That's great, Pat. Thank you.
This is what Pat does all day long.
And I have done for 19 years.
Mhm.
So can I just put it in the chat? Is that all right?
Yes, and I'll put mine there.
Okay,
Very
good.
good.
Thanks,
Awesome.
Eve. Thank you.
And our marriage is very rich.
Yeah, as far as personal deductions for medical expenses, there's going to be federal rules and state rules,
Yeah.
and that's going to differ for everybody. Okay, very good. So, where we go. All right, so again, I'll drop it in the chat in case anybody wants to join us for our priorities workshop. This is our cheapest one of the year, $49 to get together as a community and set these priorities. If you are already in the second Saturday, you do not have to register for that. You are already bonused in.
Ah,
Any other questions?
Could I ask one more? This is Linda again.
Yeah, go for it.
Just as I was signing on, you were talking to somebody else in the group here about something that had to be done by the 31st. I don't know if that has anything to do with what we're talking about today or that was another time, but I just wanted to see if I missed anything.
Yeah, so the your beneficial ownership information report has to be done by the 31st. Linda, do you have a LLC or a corporation?
No, I do not.
Oh, then never mind. You don't have to do anything.
Well, that's good. One less thing to worry
Yeah,
about.
one less thing for you to do.
I got plenty of other things to worry about.
Yeah.
Right. Thank you.
Yeah, for those of you that do have an LLC or a corporation, you should do it. You technically, because of a recent court case, do not have to do it by the 31st, but I am telling everyone not to take that risk. It's a free, easy form to fill out online, and I would not risk $10,000 on 15 minutes of my time personally. Again, I'm getting some pushback. Some people are like, screw it, I don't want to do it. I'm like, okay, well, that's up to you. Can't make you. But the form is incredibly simple, and it's not providing the government with anything they can't find out anyway. You're not giving up any secrets.
oops, I misspelled it.
Ian, I have one more question, if one more second.
Yeah, go ahead, Katie.
On the question of deductions and classes and whatnot, I know people are talking about that. If you, like, I know, for instance, of my coaching, I can deduct that, like with Meredith, I'm assuming. It's really integral to my business. But what about, like, if I'm in another membership, a health membership, but I get some of my ideas for my business from there. Like it's related, but can I use that too, or not really?
I mean, the real question is, can you make the argument that's a ordinary and necessary expense for your business? Is it a sort of regular, normal, appropriate thing for your business to do? Then I would deduct it. If
I
it's
don't know.
helping you, if it's helping you run your business,
right?
If it's giving you tools that you use with your clients to serve people,
Okay.
then personally, I would go for
like
it.
I've gotten some of my guest experts from that group, so that I
Yeah,
then, stuff like that. Like I'm learning from that group and then I teach some of that stuff to my people. So,
yeah.
okay,
And
so that could be
personally, I
good.
would do it. And
Uh-huh.
I would say the worst thing that could happen is I get audited and I have to give up the deduction and pay the tax I would have owed anyway. That's worst case.
But don't they penalize you though too? Or
Well, you might have some interest. There wouldn't be a penalty on something like that
oh, okay.
because you can make a good faith effort. There's only a penalty if you're acting in bad faith, typically, or
Yeah, no, yeah, I never do that. I mean, I'm super, super above board. I just, yeah.
and interest is just interest on money, just like, just like you would have to pay to a bank anyway. So I wouldn't worry about that.
Okay. All right. Thank you.
Yeah, you bet. Linda.
This is a different situation. So, I'm a LinkedIn coach and I collect money from people as a project fee in the front end and then go from there. So, I've had a couple of people who, it doesn't happen often. I had one woman who signed up with me and I'm sorry.
Oh, go ahead.
I, one woman signed up with me, and then she had her mother was very sick, and she wanted to walk away from that. So she asked me for a refund, which I gave her. And then I had another one who didn't really stick with the agreement, but I let her go because she was just too difficult. But can I claim either one of those things as a loss? Or does it not matter because they got their money back anyway?
Well, yeah, it's not really a loss. Like if somebody pays you 1,000 and you give them back, there's no loss there. Usually what you have to do is claim the 1,000 as income, and then you claim the $1,000 refund on the refunds line on the tax return. There's going to be a line for refunds and returns on the return.
Okay. All right.
And
So I
that,
could do that in either case, whether it was difficult or
yeah,
medical or
the
whatever.
reason
Doesn't
the
matter.
government doesn't care what the reason was. The
Yes.
point is you got income in, so it is income, and then you refunded it. Then they usually call it a refunds and returns line or something like that.
Refunds and returns on Schedule C.
Yeah, if you're filing a Schedule C, yeah.
Yeah. Refunds and returns.
And
Okay.
then that'll be up at the top of the Schedule C. So it will deduct from your gross income right off the bat, but before you even get to expenses. Yeah.
Okay, good. Thank you.
Yeah.
That will help a little bit.
Yeah. The problem is what people do is say they paid me 1,000 and I gave the refund, so I'm gonna just not claim either. Well, then the problem is the government says, well, you didn't claim that 1,000, but Stripe or PayPal or whatever says you got it.
Right, right,
Then it becomes an audit issue.
right. Don't need that.
Don't need that.
Okay.
Don't need
Thank
that.
you.
So yeah, claim the income and then deduct the refund on the refund and returns line. I forget what the line is called, but it's something like that. Yeah.
Yeah, I'm sure I can find it. Thank you.
Similar things with your the fees you pay to Stripe and PayPal and Square, right? If
Yeah, I deduct. Yes, I always deduct those.
okay,
Yeah.
good. Yeah, good. Because again, some
I
people
use Square all the time. It's unfortunately, yeah, there's a lot of money going right out the door just for that. So,
don't think of it as money going out that you're paying for a service.
well, that's true.
You're paying them to process money for you. That would be more difficult to collect otherwise.
Yes, that's even more true.
Yeah.
So,
There are
yeah,
some clients who, if you didn't have a credit card processor, they wouldn't pay you.
right. No, that's
Right.
true.
So
And I have international people too. So,
yeah, so there you go. So
yeah,
the 3% you pay to them,
and exactly chase them around the world.
yeah, and they take care of it, right? You're paying them for a very valuable service. So you report the gross income you get paid, then you deduct the fees on the back end. The mistake people make sometimes is just reporting the net, and then there's a mismatch in the government's records.
Okay, say that again real quick. Report the
You report the gross. So let's say somebody pays you $1,000 by Square,
right,
and you pay Square a $30 fee, 3%.
right, right,
So your net is 970. So you report $1,000 in income, and then you deduct the $30 fee.
right.
The mistake people make is trying to net it out up front and say, I'm just going to report the 970.
Oh, okay, but I don't think
That's a
I'm doing,
mistake people make.
I don't think I'm doing that. I've
Yeah,
got it.
most people don't, but a handful are still
Yeah.
doing it. And then what happens is there's a mismatch in the government's
Right.
information records and you
Yeah.
get audited. So,
Okay, got it. Yeah, no, I've got a separate line item for them.
yeah, good.
Okay, thank you.
Thanks, Linda. All right, great. Any other questions?
Yep.
Yeah.
I want to make sure I'm hitting every tax benefit I can get because I'm putting out money everywhere and it's taken, savings have gone.
Mhm.
So any ideas on my best resource of everything I can possibly,
Oh,
yeah,
I don't know, a resource for every possible tax benefit.
yeah,
I would Google it.
yeah, I'm gonna do that. Okay,
Yeah, I that's it's a broad question. Yeah.
yeah, okay.
Mhm. Yeah. All right, very good. Thank you so much, everyone. Good to see you all who could make it today. Happy holidays to everybody. I love you all as always.
Thank you.
And again, if some of you are going to be there on January 4th anyway, because you're part of it. If you're not, you can sign up separately for that. And I would love to see you all there. All right. Take care.
Thank you.
Conduct this.